Are we all doing today? Very interesting price action yesterday. We're going to talk about that, and we're also going to talk about why, after we got our initial move to the upside in Asia, we did not get any continuation. We're going to talk about how you could have identified that and lots more. I've got some very interesting things to show you today about why there is such high volatility in price action at the moment. So before we get into that, let's just say a quick good morning to everyone as you're joining in. What is up, Tim? Greetings, Fee Fusion from Spain, 2:15 a.m. Thank you for staying up to be on here. That is huge. Willie in the US, Janet, Rocky, my brother's name's Rocky. I think I tell you that every single time. Dan, Lenny, what's up? Alicia, Camille, good to see you all here. I keep getting these comments about my microphone and telling me to buy a Rode and blah, blah, blah. I have all of that. So I don't know if it's just that one person, but can you guys let me know if you can hear me okay? Because I have the volume switched right up. It's hitting into the red. Yeah, it's a high quality mic. I'm really not sure if it's just one person or there's an actual problem going on. So yeah, let me know if you can hear me okay. We are going to talk about a lot of things today. I covered a lot of things yesterday, but I've got a lot more to add. I don't, so Claire says, don't let it clip into the red. I normally don't, but I've turned it up even more today because I keep getting that one complaint. So everybody else is saying it's fine. So I'm going to assume that that person needs to visit their doctor and have their hearing checked. And we are just going to keep going on here then, because it looks like everybody else is good. All right, be sure to smash up that like button. 171 watching at the moment. That is a pretty good turnout for 3 minutes into a video on this channel, as we are a fairly small channel. I'm still sitting on that 11.9, dying to crack that 12K this week. So if you haven't hit subscribe already, be sure to do that and turn the bell notification to all so you can be notified every time I upload a new video. Now, I'm getting one guide. Yeah, I am. Your mic said BTC to 100K. One day. So if you keep making massive calls like that, eventually you'll be right? Now, let's talk about this before I show you something really interesting. Bear with me today. I'm not sure if this is going to turn out to be a longer video, but I just want to talk about yesterday's price action before we zoom out and take a look at everything else. Let's focus in on Bitcoin. Bitcoin first. And I want to talk about what happened yesterday. So on yesterday's video, we were here in the dead gap zone. We were expecting more of a move to the upside as US had consolidated all day and set up for Asia to make a move. So Asia did that right at the end of their session. And what we were saying on yesterday's video was we needed to see, because we had this one attempt into the previous vector, this is a 1 hour vector between around 19,600 to 19,850. Because we'd had this one attempt, we needed to see price next be able to break through that and then break through the high of the week if there was going to be continuation to the upside. So after the Asia move, we didn't get that. It really didn't seem to go anywhere. And then we sold off and came back and created a lower high. That was fine at that point in time because we're still above the EMAs. However, we then sold off and broke below the EMAs. So it was at this point in time that I did an update in my Discord. So again, if you're not in the Discord, you want to get yourself in there because I can update you per session in the Discord. I can't really do that on YouTube because I'm not really able to go live 3 times a day. But in the Discord, after this had happened, I had said that I was still long at that point in time and that if price came up and failed the 50 EMA, that's when I would flip short. Now, price did come up and it didn't fail the 50 EMA, it broke through. So that was one good sign at that point in time and I stayed long. And then after that, the next thing came then that I wanted to see price break through the halfway level of the Asia session. So I'll just approximate it. It was around 19.6. I remember now. So, and that happened as well. Now, the last problem was that what is US, which US always ruins the fun, but US came in and it printed this big red candle. How could you have anticipated at the time that that was a signal the move was over when previously we had this green vector, we had a purple move to downside? That wasn't your signal there, but why was this one? And the simple answer to that is because we failed 3 times within the same day, but different sessions, to break up into the vector candle zone, at least a 50% level of it. So that was your hint there that this move was over and we were likely to come down. Now, obviously then from that point on, US did reverse this. And the question now is there more downside or is there more upside? Before we worry about that, let's just zoom out and see where they did take us to, because we did have a fairly dramatic drop that almost brought us back to our weekend trap. However, it did not release these traders right here. So that is something that I'm keeping in mind for now. If there is to be further downside today, I definitely want to see if these traders here get released. If they do, that's not going to be good. We'll be going down a lot more. But if they keep them trapped, then this could just be a hunt for the liquidity, because right now retail are massively guessing the direction, and I'm going to show you that in a second. So now the second hint, I said this to you yesterday, that ETH follows the model so much better and it's much easier to pick the moves on ETH than anything else. So even if Bitcoin at those 3 hits to the high confused you yesterday, ETH was a much, much, much more obvious signal, because we had the one high here in Asia, the second high here, end of Asia, and the third one was a lower high. That is extremely bearish. So the fact that we got this lower high on ETH was your definite second hint that the move to the upside was over. And we were heading down. Now, again, then we look to what have we recovered so far, and we can identify this blue vector here has been tapped into once. So we've done a full recovery of this green one, this one here, and now we've just got this blue one left. So will they come back into that area one more time before they then pick the next direction? That remains to be seen. But that's not what I want to talk about just yet, because I want to talk about something a lot more important. Now, I'm just trying to see what is going on here. I always get wrecked when I'm sleeping. Well, then close your trades before you go to bed. Seems obvious, right? Don't try to hold on it too long. She sounds like a radio announcer. Okay, so here's what I want to talk about, which is so much more important, and you're going to hate me because I know you love to day trade and be total degens, and you want to trade every day, and you want your 3 rises every day and then your 3 drops every day, and you want all of these sorts of things. But too bad, because today's lesson is a lesson on patience, and if you set yourself up correctly, there is going to be a much bigger and more important move coming, and that's what I want to talk about. So I'm first going to go and have a look at the overall markets. Number one is, what I want you to be aware of is that if you have a look at absolutely everything that is going on right now, all price action yesterday was in a vector zone on its 4-hour time frame. So Bitcoin here was in this vector zone right here, which lined up with the 200 EMA. ETH was in this vector zone right here, which was under the 200 EMA. The S&P was it entered into this vector zone right here. And we had talked on yesterday's video that if there was going to be continuation, we wanted to see that break above and then get above the 200 EMA. So it's done a full recovery at this point in time, but it has not broken the 200 EMA. And this is the point where it could fall over or break through with strength. So it's literally decision time where it is right now. So you need to keep an eye on that. NASDAQ, yesterday we were waiting for it to recover this vector candle down here, which it did, and we wanted it to then come into this zone. And now it's in exactly the same position where it's about halfway through that zone. if there's going to be continuation, it needs to get through the rest and then above and retest the 200. So at any point in time, if it can't meet any of those conditions, that is also a reversal to the downside and not great. On the Dixie, we are also in a vector zone. What do you know? We are currently recovering this one here, and that the bottom of that candle, hang on, if I draw it actually properly, lines up with the 4-hour 200. So we are literally in decision point on everything, and that is why if you're trying, this is on higher time frames. So that is why if you are trying to trade, it's okay, I only lost $1. Good for you for learning properly. If you are trying to pick your trades on a 15-minute time frame or trying to scalp or whatnot, this is literally probably the worst area to do that, because we have extreme volatility as price tries to recover a higher time frame vector. It's very rare that price will be able to recover a higher time frame vector in just one attempt. Very rare. If it does, it's usually causing another new imbalance that will come back for later. So extreme patience is needed in this area currently when you're looking at anything. Also, we still have this bond, 10-year bond issue that has been pushing up all day yesterday. So definitely eyes on that for a potential break to the upside. So now that you know where we are in the market overall, I want to talk about Bitcoin on the daily and why we might be seeing this super high volatility. Somebody mentioned in the Discord that the 20 billion rule may no longer be relevant. It's absolutely still relevant. However, it's not going to matter in where we are in the current price action. And I'm going to show you that now. So if I just put, what do I want to put on? I'll put these on now. Excuse me. So one thing I always say to you about trading this method is that you need to still understand. So sorry if you guys can hear my child absolutely smashing plates in the background. She doesn't understand how to be quiet. But anyway, one thing I always
What did you say?
Just a little bit less noise would be ideal. Sorry, guys. But yes, anyway, as I was saying, if you want to learn to trade this method, then I always say it's an advantage to still understand retail patterns. Trinae doing the dishes, just making breakfast. So here's what I want to talk about. Now, when I draw this out as a retail pattern, it becomes very obvious to you on a higher time, or it should become very obvious to you on a higher time frame, why the lower time frames are very, very tricky. Look at where we are in the current price action. We are literally in the squeeze point of where retail is going to make or trying to make decisions as to whether they think we're going to break out to the upside or we're going to break out to the downside. What this means right now is the market maker is working their hardest right now to induce retail to take positions. They're creating these lower highs that keeps price under the trend line. They're not breaking the 18,450-ish kind of level, making people believe that support is in. So people who have a bullish bias as retail traders are starting to say that we're going to break out to the upside. People who are bearish are saying that this is very bearish and, 10K is probably likely next. This is where the major confusion comes in, and you start to see a lot of social media talk about breakout imminent. What is the other one? It's Black Swan event coming, and it gets really extremely confusing. And when you see that high volatility, you know that the market maker is at work causing that confusion on purpose. At the end of the day, if you know this particular method, then there's only one of two ways to trade this. You either wait for a daily to break above the 50 EMA, retest it, and we're good, or it breaks below and then we're looking for that weekly drop level 3 that we've been talking about for a long time. Now, here's the thing about this. The problem with this is that number one, if they want to continue squeezing price, actually I should have left that open. If they want to continue squeezing price into the corner of this, where did I put it now? Yep. That's a potential another 14 days of the squeeze until we actually get a breakout. If we squeeze right into the very corner of it, it's a potential another 14 days. Now that lines up with around the 1st of November. So around the 1st of November. Now, what do we have around the 1st of November? Let's go and have a look at Forex Factory. And where is it? Here we go. Oh, this is the 3rd. So around that date, it will be 3rd, 2nd, yeah. We have the FOMC. So, and there's a lot of speculation about this. That's, I saw this tweet. Let me find it now. This tweet here. Don't get faked out this week from Crypto Damas. Any rallies on Venus Kazemi this week will likely not last into eclipse season, as the Fed will raise 0.7 again on November 2nd. So he's expecting it to be terrible after November 2nd and we break down even further. But then the response to that, a lot of people are saying is, well, is that already priced in? So yes, and I believe midterm elections are somewhere early November as well. So a lot of this is going on right now for the market maker to accumulate. And the other thing too is when you look on the daily time frame, I actually want to show you this on the 4-hour time frame because it's very, very interesting what is happening over here. So when we zoom out on the 4-hour time frame, let's have a look now at our volume bars because they give us a hint as well. So if we look at this whole accumulation range, we can see we've got these 4 spikes to the high. They turn from red to green. This gives you a hint of which way they may be accumulating at this point in time. So sorry. However, it is definitely a trap, but more important than what way they may be accumulating, what I want to show you is look at the candle structure in these huge volume spikes. So this particular red candle here is this volume down here. Look at the wicks either side of that red candle. Let me zoom this out so you can see it really well. Okay, then we've got the next high volume spike, which was a complete reversal of this attempted push to the upside, this huge red candle right here. The next one was this green one. Look at the wicks either side of this green one. And then the final one was a stopping volume candle. Look at the massive wicks down there. So these 4 candles alone on the 4-hour time frame should be enough to tell you that committing your money to the market right now is asking for trouble. And I'm sorry to say it, but that's what I think. And so that's what I have to tell you. At the end of the day, I think there is a good way to trade this. And I have to go back to how I traded it in the past. So let's have a look at this. Sorry. Now, this period of time here was that little period in the bull market when we went to 60K, we dropped to 29 and we held here for 2 months and everyone was like, what is going on? And many people were saying the bull market is over, and then we ended up shooting out to the upside. Now, this price action is very similar to the current price action that we have now. However, it's a lot more drawn out. So what I want you to identify about this is initially when we were reaching the bottom levels, we were reaching them with wicks, and these wicks were coming in to recover this vector candle right here, right? Then once it was done picking up those orders, we had a full-bodied green candle that was the final move before it broke out to the upside. That was where, for me, that was where I actually took the entry. If you guys were trading with me at that time, you will know that that is what happened. But the thing with this was, if you didn't take that chance there, then there wasn't a retest of the 50 EMA until Bitcoin moved 42%. So the problem is that if you aren't on your toes over the next 2 weeks to get the breakout, whichever way it goes, it's probably going to break out huge and you're going to have major FOMO when it does a 42% move. Now, I'm not saying it will be to the upside. It could be either side, But what I'm saying is, if I were you, well, you do you, but for me, I'm not committing my money to this price action right now. I'm going to wait for this bigger move, and I'm going to be fresh, and I'm going to be in a good mindset, because if I try to commit money to trades right now and I keep getting them wrong, it's going to affect my mindset. And then when the actual breakout does come, I'm not going to be on my game to get it. I'm going to miss it, and I'm going to be annoyed. So I'm not going to put myself through that. If I have to wait 2 weeks for a potential 40% move, fine. There's other things I can do in that time. I can learn more. I can study more. I can practice more. I can film more bloody videos for you guys for the education. There's so much more I could do in 2 weeks than trying to force trades and commit my money because I want to try and guess. You really should be waiting as we come into the squeeze point. You really should be waiting for that final trigger, whichever way it goes. Now, as I said to you, with this one here, if you weren't on your game and you didn't get that breakout, then not only did it go 40% before it came back to test the 50 EMA, but it also took 14 days. So could you imagine the FOMO in 14 days? I can tell you because I saw it. In that 14-day period when people didn't get the breakout and everyone was like, is it going to come back for a retest? Like, this is what you're setting yourself up for if you're going to be staying up late trading now or trying to trade every session now because you want to get the breakout. Just sit back and learn and just watch the market and educate yourself. You don't have to be committed to a trade to learn. Now, I want to go back and show you one more example because that's not the first time that happened. This was the second time this happened. First time. This was another time this happened. Excuse me. Now, this was after Corona, right? So we had this big Corona dump and price moved up to the 10.2-ish region and it hit resistance here. And everybody was saying that, it's going to come back down like that. It's at resistance. It's all over, blah, blah, blah. But we literally had the exact same situation. We had a vector candle here. We had wicks into the candle, and then price did not want to come back into that area at all. At the same time, we had wicks here that created basically a support level. And then we had the green full-bodied candle, and this one broke out of the zone. So from there, same thing, we had a 35% move before it came back to retest an EMA. And how long did that take? Let's have a look. So from the breakout to the retest was 46 days. So if you weren't on your toes, you would have seen this 35% move. You would have been pissed off that you missed it. Why? Because in this little area here, so I know I'm giving you a lecture, but I just think this is so important. In this little area here, you were trying to guess long or short, and you were trying to count 3-level rises and 3-level drops. And because all your energy was here, you missed here. So this is what I'm trying, this is basically a future of what may happen. Now, because these two broke to the upside, I'm not saying that what's happening now is going to break to the upside, because I can show you an example. This happened in 2018 and it went to the downside. So that's not what I'm saying. What I'm saying is be on your toes as we come into the pointy end of this triangle, because the market maker is working his hardest right now to accumulate and trick retail. Don't be them. Don't be them. Just be on your toes and wait for the actual move, but be sure to get it, because if you then doubt yourself, you're going to miss the 35-40% move, right? Now, the other thing too, what was I going to say? This was another one that actually caught this trade, and I held this trade till $40,000, which was insane, absolutely insane. Sorry, but it was because I was on my toes, right? So, and the setup on both of these is exactly the same. Price wicked into a previous vector candle zone. It wicked there a couple of times. It gave us the full-bodied candle that gave us the hint that breakout was imminent, and then bang, it went off. You need to be able to anticipate that, which is why I'm saying, why are you wasting your time on this little move here, right? Let's watch for the bigger move as we squeeze tighter into that zone. So for me personally, I'm not trying to look for M's and W's on a 15-minute time frame. If price comes back into this area here, let me go back to actually I'll go to the 1 hour because it's clearer there. Yeah. So if price comes back into, let's mark this candle properly, into this 1 hour vector candle right here, did I mark it? Yeah, I did mark it properly. Let me just turn this one off. I'm getting confused. Sorry. So if price can come back into this candle here, that's my reassessing zone. I know that it's been holding this 18,450-ish kind of level. So as long as it can hold there, then I may be able to take a long position in anticipation of a breakout to the upside, because I'll be able to have, let's just assume I get my entry there, I can have a stop loss below this here, and if the breakout's going to give me 40% to the upside, it's just going to be a huge trade, so it's worth a risk for me to take that. Now, the other side is, if it's then going to go to the downside, then we're watching to see a failure of the ability to break through not just the trend line, but also this particular vector candle here. One thing I want to caution you about is, as we squeeze into this zone, be prepared for the first breakout to be a fake out. It's highly likely that we may fake out one way before we then have the real move the other way. And that will very much depend on news events and what kind of an excuse we kind of have. So halfway into that green vector, yes, that will be the first area that I watch for a bounce. If we break below that, then I wait for a full recovery and see if we bounce there. So for the short position, I believe the best short position is already in, which was from last night. So worth holding your shorts to see what happens if we come back into this zone. You could potentially bag flip there, or if it's looking terribly weak, you've already got yourself a really good short position for the eventual breakdown of 18,400-ish kind of region. So hopefully that all makes sense. But yeah, that's kind of what I'm looking for. So 15 minutes is kind of irrelevant to me at this point in time, because I want to be fresh for these bigger moves. Now, let me just have a look at some of these comments, because I just maxed out my credit cards to buy more BTC. No. Listen, I'm not saying break out to the upside. This could absolutely break down 40% to the downside. I'm saying, like, this potential zone here, I shouldn't even call it a zone. This is not a potential long zone. It's an area of interest. This here is going to tell us the story. If we can come back into this candle and bounce strongly out of it, then I would say we're probably going to break to the upside. But if we start to recover this entire candle, it's not going to look good. And again, all of this is going to line up with news events and whether they're positive or negative. I just don't want to make a retail breakout trade. Yeah, you won't. That's why I said we're going to anticipate the move before it happens. So what you have to realize is, if the price starts to come back down here again, retail are going to turn extremely bearish, because right now some retail are saying breakout imminent, we're due for a rally to the upside, which I agree with. However, we're clearly not there yet. The price isn't telling us that it's happening yet. But once the retail starts flipping bearish, if we enter back into this zone, they're going to start calling 10K again, 12K. They're going to start calling those numbers again. And that's when you know, because you know this method and you're smarter, you know to look for that 50% and that full recovery. I really hope people heed your warning. I hope so too, Joshua. Yeah, we just got to trade what we see. We can't anticipate. There's so much news out there about things getting much, much worse. Sorry. And you know, at the end of the day, there's just more to see. There was something else I wanted to show you regarding the volume. Let me just see if I can find it now, because I forgot where it was. Hang on. Where is my thing gone? Here we go. Yes, regarding the volume here. So if you remember, I showed you on the 4-hour time frame how, I'm so sorry that took so long, but how the volume flipped from red to green spikes. Have a look now on a lower time frame how the volume massive spikes have flipped from green to red. So again, like, that is such an important thing to watch, is when the huge spikes have that shift in color. And so right now our big spikes are red. So yeah, kind of expecting potentially a H bottom to form today. Let me just draw that out for those who don't know what it is. So we have come down, we attempted this recovery, potential come back to retest this level here again is kind of what I'm waiting for. And then if we fail that level, then I'm looking for us to enter into this zone where I will reassess what I think is going to happen from there. So yeah, that's what I'm kind of watching for. The other thing that actually I really do want to show you to be aware of, let me just get rid of this, is actually on the 5-minute time frame, which it's just really important to have a look at this right now, because on the 5-minute time frame, we had our M formation, we had our retest. So M formation, drop, retest, drop, board meeting, drop. We had that already. And then this here is basically a 5-minute V-shaped recovery that has done a full recovery of these vector candles down here. So another thing to watch for is if Bitcoin continues to bleed down today, keep watching the 5-minute time frame and see if we get a W formation. Not that I would particularly say trade it, but if we get that, it may mean that we're not entering this zone at all as we go into that price squeeze, and it could be a short term, or it could be an area to get your long position. So just keep an eye on that as well, as another thing to watch out for. I'm just reading these comments. How high can open interest go before? Let's have a look at the open interest. Open interest can keep going in as much as they want it to, really. But that is another point that yesterday we did have a rising open interest before we had this sell-off. And I think it's going to continue to be a problem because why? Now you know why. We're squeezing into that zone. So open interest rises when the market maker is meeting the other side of limit orders. So the more that retail try to guess the breakout, the more the market maker is going to meet your order, and that open interest will continue to rise until what happens? Eventually we burst. In addition to that, for the last week or so, you've probably noticed, if you do watch heat maps, that above and below price, there have been extremely large orders, always above 1K at very many levels. Again, that's just indication of a price squeeze. So this 19,350 up until 19,700, that's the whole range that people want to short. And then 19,200 to 18,800 is the whole area where people want to long. Now, if we do come back down into those zones, it's going to come back into that vector candle that I mentioned. So that's fine. And if it comes up into these zones, it's going to come up into the above vector candle that I mentioned. And that is also fine. Those two areas are going to be the better spot for you to get your long or short position, rather than trying to enter off an M or W off a 15-minute time frame right now. So the trick here, what I'm trying to say is the trade setup you should be looking for shouldn't be an entry for the current day. Let's have a look at these liquidation, because this is very, very interesting as well and gives us a very important lesson of how retail are trying to guess. Now, this is zoomed out to 12 hours, the price action over the last 12 hours. And what has happened here, which was not previously here, is besides what's going on around current price, this level up here was not previously there. This level here is growing, this one down here is growing, and this one here is growing. Now, it's irrelevant what actual numbers they are. The point being, the fact that you can see that means that people are taking lower leverage positions, trying to guess where the breakout's going to be. They're giving themselves room to move so that price can spike either way. But this is just adding to the fact that retail are guessing right now. So they're trying to guess if the breakout's going to be long or the breakout's going to be short, and they are committing money to the markets, which is what the market maker wants. So at the end of the day, once a decision is made, these levels will then become our targets. But what we want to see is the more that increases, the more we know retail is guessing, the more we know market maker is achieving his objective, which is to get you to commit to a trade. So in the current price range, the kind of closest levels that we have for liquidity, if they just wanted to tap into something close, is 19.5 above price, and below is around the 19K. So 19 round numbers, 19K, 19.5 are going to be where the market maker can do some damage to people that are currently open. Yesterday we had the delta was green, it switched to red. So it goes to show in just one relatively small move down here, we can get people to completely change their mind. So delta currently is at 4 billion. And look, there's liquidity either side of price. They could take it wherever they want. What else do I have to say? Futures OKX team. If you have not joined our team and you're wanting to join, OKX is running a futures team competition, prize pool of up to 400,000 USDT. We have currently the second biggest team in the competition. So what I really need you guys to do is join, because we got to take out this guy. Adam, who are you? Go away. We're going to win. We're going to beat you. So we need 198 people, guys. We need to beat this Adam guy. I don't know who he is, but it's not okay. Let's look for our team. Where is our team? 98. Oh my God, now he's 201. Come on, guys. We have to double our team so that we have the biggest team here. And that's going to help us win. Do you guys know who this person is? I don't know. I apologize. So anyway, that's it. That's all I've got to say. Don't even worry about lower time frames. Get yourself set up for the bigger move that's coming. Be fresh. Play it like a market maker. You know, the market maker doesn't stare at charts for 14 hours a day. They do their 8-hour shift and they're out. And that is it. That's all I got to say. Hope you enjoyed that. I will leave you there, and I will see you guys tomorrow. Be safe.